All right, everyone, we're going to try this again. I'm Jason Kelly of Bloomberg New York Bureau Chief, as well as the co-host of Bloomberg Business Week. Welcome to the Year Ahead Revisited. I am so excited to be a part of this because it's something we've been doing for a few years now, myself and Jim Coulter. Usually we're in New York, usually we're together, and usually it's November or December, and we're thinking about the year ahead. Well, since the last time we did this, a lot has changed. We're going to get to Jim in just a second. In the meantime, just a couple of housekeeping issues for you. As you can tell, we're all living in this world that is very virtual. We're relying on technology. I am, as well as you are, as you can tell, here in my home studio, also known as my daughter's bedroom. So if you catch a glimpse of Anna or Elsa on the wall, that's where I am. But if you have any problems, just refresh your browser. Usually that does the trick. And we're going to get on with the show. So Jim Coulter joining me from San Francisco. First of all, how are you?
All in all, Jason, I'm doing well. It's been a complicated and difficult year, but on a personal basis, all's good.
Good, good. Well, it's nice to see your face. It's a strange time we're living in, and I guess, you know, we started doing this a few years ago, you and I, and it stemmed from something that you do every year for your investors. Set the table for us, and then we're going to set the table for what we're going to hear. But remind us what this is. We're sort of getting a peek inside your brain, as well as what you tell your own investors.
So 27 years ago, Jason, when we began building TPG, we realized as well as building an investment firm, we were building a really interesting front row seat for the world of business. So if you look inside our ecosystem today, over 200 companies across 29 different countries, 12 different sectors, more than $100 billion of revenue. And we're in the boardroom of those companies watching the challenges they face. In addition, we write almost 10,000 pages a year of things called investment memos. Think of them as research. And so we challenged ourselves to, from time to time, pick our head up from the individual investments and see what the ecosystem is telling us about the world. We began sharing that privately with our investors. And somewhere along the way, I'm not quite sure how you did it, you convinced me to do this publicly. And here we are.
Well, I have to say, it is the runaway hit every year at the year ahead. And I have to say, part of the inspiration for this was candidly me thinking about you and thinking what you must be going through in your own mind and with your team. You know, it's also interesting for me to think about as we kick off this idea that even when you and I conceived this a couple months ago, this refresh, the world has become a very different place. And I would love for you to set the table, if you can, by talking about these dual crises that we're facing. You know, one that we've been in for a number of weeks now, a number of months, but one that's a little more recent. So let's start, if we can, on this question of racial justice, because I know it's something you've thought about, and I know that TPG is talking about, and that you're talking to that huge sort of Rolodex, or not even Rolodex, but you know, the partners that you have around the world.
A lot has changed since we were together in November. A number of the trends we're talking about, the rise of subscription businesses, corporate responsibility, are continuing apace. But clearly, when the history of the year is written, it'll be about two issues that have shaped the first half of the year. And I think those two issues are likely to drive the year ahead. The coronavirus, we're all beginning to build our understanding on, but much more recent is the racial justice movement. And quite frankly, I hesitated to talk about it today. It still feels early. It still feels like a moment that we're all dealing with the pain of the murders of Rayshard Brooks, Ahmaud Arbery, George Floyd, Breonna Taylor. And we're still in the middle of, I think, a societal and personal journey, particularly for people like you and I, Jason, who have had the privilege of growing up in a country as a white male. But I knew you'd ask. You're a reporter, so let me just share a few early thoughts about where I think we are and how it might shape the year ahead. There are many, many words that we could use, but I think it may be best just to start with pictures. It feels different this time. 3,500 cities of protests. And if you go into these pictures, you see a racially diverse group of people engaged in it. Only 2 years ago, 40% of people were backing the Black Lives Matter movement. Today, 7 out of 10 white Americans say that racial injustice is a major problem for the country. These protesters were not deterred by a global pandemic. They were not deterred by tear gas in Washington, tornadoes in Florida. And the depth and breadth of what we're seeing, I think, speaks well to how it will shape the world ahead. You know, one of the pictures, quite frankly, that really impacted me was this is no longer just a U.S. issue. It's an issue that has grabbed the global attention, both reflecting upon the U.S. and reflecting on broader issues within the world. So as I look at where we traveled so far and the world ahead, I think we're in the midst of a social and political revolution that's likely to be expressed in many ways. The question we also have to engage on is, will it be expressed in the business and investment world? And here, I think I'm beginning to see a birth of a bit of optimism and a bit of action that I have to say I wasn't expecting to see as fast, and I'm gratified to see that it is moving. Let me just touch on a little bit of that. One of the cultural bellwethers I always look to, Jason, are the sports teams and Hollywood. And sometime they give you a sense of how the world is going to engage in an issue. And here the news is frankly nothing short of gratifying and amazing. The NFL, which was only 2016 that Colin Kaepernick took a knee. Think about what's happened since then. And in a immediate 180, it's moved to the right side of this issue. The idea that NASCAR would ban the Confederate flag from its events was a distant thought not too long ago. And one of the things I love, if you look at the announcement here, Jason, the presence of the Confederate flag, small c, Confederate. Traditionally, it's been large C, delegating not only the flag, but the Confederacy to the place it belongs to go. And the Premier League, perhaps the most coveted advertising space in sports, is a Premier League jersey. What's on there now? Black Lives Matter. So we're beginning to see the early signs of engagement through some of the cultural icons of the world. But the question is it going to spread? And here again, cautious green shoots. 3 points I'd make. First of all, we have a little bit of an inside view of this because we own a company called EverFi, which is the #1 producer of software on everything from D&I training to allyship to unconscious bias. They also produce software that is resetting the teaching of African American history. And when we look inside that company, I was talking to the CEO over the weekend, we are seeing a doubling and tripling of inquiries from companies. So companies are understanding they can't just speak externally about this. They need to get their own house in order. So first of all, we're seeing early evidence of companies changing their internal practices. Second, companies are stepping forward in a public way, and they're stepping forward with their pocketbook. The Fortune 100 has already, according to Axios, done $1.6 billion of pledges led by Bank of America. And so we're seeing engagement at a level we haven't seen before. And the third area, and this is in some ways, I think, the most important, is our business is really going to change their business practices to reflect this. And again, early green shoots, the 15% pledge, the idea of putting 15% of your shelf space into African American brands and companies. Amazon, Microsoft, and IBM have stopped selling facial recognition software. Estee Lauder is changing their hiring practices and committing to reflect the world makeup in their workforce, not just their historical makeup by 2025. And even this morning, Pepsi pulling the Aunt Jemima brand. We're beginning to see actions on the business practices side that will strengthen the movement. And the third thing I would point out is yet to be seen, but again, I'm hopeful, is will consumers engage? Because if we can get society to engage, businesses to engage, and consumers to engage, it'll build the foundation of what's happening here. While in no way drawing equivalency, over my career, I've seen time to time where consumers have picked up social issues and expressed that in their buying patterns. We saw that in the clean food movement, where organic grew to new levels as people expressed their desire to change how we eat as Americans. More recently, sustainable products of all sorts have really become the consumer choice. 50% CPG growth over the last few years have been in sustainable products. 30% of consumers say that they will spend more for a green product. So as we look forward on the racial justice movement, will consumers also express their desire here? We're seeing early evidence of that. Recent polls showed that 70% of consumers said that they would reconsider their purchasing habits from a company if the CEO didn't speak up on this matter. So if we can get all of these flywheels working, society, business, consumer behavior, I think that the year ahead will be deeply shaped by this moment in this movement.
Before we move on to the next topic, I do have to ask you, in part because I know you're an avid reader, you talk to a lot of people, and you're a very thoughtful guy. What are you thinking about personally? What are you reading? Do you have any recommendations? I mean, I'm constantly asking people that because I feel like, and you alluded to this, we're a couple privileged white guys who grown up in a very different way than a lot of people who were experiencing these horrific things and continue to experience them. What should we be reading and thinking about? What's your advice?
Well, on a personal and firm level, we've really started with the first step being engagement at the intellectual understanding of your role in this and the issues, because I think we personally and as a firm haven't dealt deeply enough in that. For me personally, let's face it, it's been a lot less Tiger King, a lot more Dr. King. And so if you look at the evenings, it's been the 13th, it's been white fragility, it's been podcasts and articles of all sorts. We put together a huge resource center at TPG. And my daughters have helped me change my Instagram feed such that I have different voices in it so I can begin to understand the interpretation. It has to be a full-on effort. If you look at TPG, we decided to engage in this in a very particular way. Jason, you can go online and see our statements, but our statements were a little bit internally focused. We believe that we have a two-step journey to go through. First, understanding, and then engagement. We're moving both of those forward. Understanding as we speak. Right now, actually, there's dozens of small group meetings happening at TPG. We're putting together people in 10-person groups to talk about these issues. We have, on the engagement side, accelerated a number of things we already started. A year ago, we backed Harlem Capital, which is a Black-led venture capital firm that has a mission of supporting 1,000 entrepreneurs of color and gender diversity in the next 20 years. You should have them on the show, Jason. Incredible story. We've built diversity into our boards in both gender and race, and we're accelerating that. And we've been getting our own house in order. This is an industry that has been disappointingly white and male, and we've been changing our pipeline and hiring processes. So we're building understanding, we're building engagement. This is a journey, and I think I've personally learned a lot already. We're not slowing down on the journey, and we're really, I think, led by a quote that's been running around my head a lot recently from Thurgood Marshall. And he said, we must dissent from apathy. We must dissent from indifference. We must dissent from fear, hatred, mistrust. We must dissent because America can do better, because America has no choice but to do better.
Right.
And my view is, at this moment, as we're deep into this moment, we have to make sure we don't slide into indifference or apathy. We have to engage because we can do better. We should do better. And I have no doubt we must do better on this. So this is going to continue to shape my personal path and I think the firm's path.
It is interesting to hear you talk about your kids too, because that certainly has been a huge influence on me as well, and colleagues that I talk to and folks like you. And I do feel like this generational upward pressure in many ways has been as significant as we've seen historically, uh, certainly in my lifetime, and I think you would have to go back to certainly the 60s to see an historical analog there. But let's talk a little bit about the other crisis, the crisis we were already living in, which is COVID and coronavirus. And one of the things that I look to someone like you on for this is some context, because if there's one thing it's living through crises. You have done this from a financial and a social perspective. I think it's fair to say.
Yeah, we were counting the other day, Jason. I think this is my seventh or eighth crisis, beginning with Black Monday through the S&L crisis, oil crisis, Asian financial crisis, and crisis of the week in Latin America. And each is different. I learned something from each of them, but there's also a rhythm to them. So I think at this moment, we need to step back a little bit and understand where we are in the process of this crisis. And let me share just a couple of thoughts on that. I think there's 6 stages to a crisis, and we talk about these at TPG. The first thing that happens is denial, and we got through denial probably back in February here in the U.S. And invariably, you move from denial to admission of the problem without really a plan to address it. So early on, we moved to quarantining and work from home without really knowing what that meant. Third stage of a crisis is we always come up with a plan. If you remember early on, we had a plan to be back to work by Easter. The first plan almost always fails. And it's after the plan fails that essentially you begin to move to uncertainty and panic. And that's kind of where we are. We're late May as people were understanding that we couldn't stay in lockdown economically, even if from epidemiology point of view, it might have made sense. And after you get through these first 5 stages, you move into the last and most important stages. This is right where we are now, where the reality of what's happened sets in and you have to set your business practices for it. So we're going into a world that is not and will not be where we were in January, and is also not the lockdown quarantine of the past few months. And setting up for that world, investing in that era is, I think, an interesting challenge at the moment. There are 2 particular odd things about this crisis that I've been trying to sort out. The first is the speed of it. So question for you, Jason, from Bear Stearns to the trough of the market in the global financial crisis, how long? No answer from me there, Jason. To the trough.
Bear Stearns to the trough of the stock market?
Yes.
2 years?
No, it's about 12 months. So stock market always troughs ahead of the crisis. So in this crisis, from the work at home moment to the trough in the market was 12 days. And so the rate at which we've moved through this crisis is extraordinarily fast by any historical standards. The second thing that's odd about this crisis is that the market is sending some pretty odd signals. And, if you go back to the global financial crisis that you and I lived through, Jason, when we were watching our screen go negative, the world was fine outside our door. And here, you go outside my door, there's people in masks, there's stores that are still boarded up, and yet the market has rebounded, in the case of NASDAQ, back to where it was before this all started. And so is this a positive signal? Is it a missed signal? I think one of the things I'm wrestling with is the market in many ways does not represent the economy. We've trained ourselves to think it does. You think about NASDAQ in this moment where some companies are doing extraordinarily well. 3,000 stocks in the index, 5 of them are 40%. The 2 sectors, technology and consumer services, that are populated by those 5 stocks are 69% of the market value of NASDAQ. But if you look into the real economy, those sectors are only about 18% of the real economy. So we're getting some positive signals out of the marketplace that may or may not play out in the real economy. And we're also distorted because at the moment, while we have huge unemployment numbers, the combination of unemployment benefits and the early government stimulus actually means that the unemployed workers, I couldn't believe this stat, are actually making 10% more being unemployed through this early period than they were a year ago. So positive, maybe false positives out of the marketplace and out of consumer spending. So if that's where we are in the crisis, I think the question is, what are the key elements that we have to think about? And I brought 6 ideas in the fashion of how we normally do this, Jason, and I don't know if we'll make it through all of them, but perhaps you could choose one and we'll get into some of the observations that our ecosystem is leading us to.
So this is my favorite part, and as a reminder for people, how this normally works is we're together in an auditorium and I just pick and choose. So I'm going to try and virtualize that. Jim, let's start, especially given where you just left off about the economy, real and otherwise. Let's start with wartime economy.
Okay, I'm going to game show format and wartime economy for 100, Jason. So I think this icon really came from my realization that we may be asking the wrong questions. As the crisis began to unfold, every phone call I had seemed to start with the question, is it a U? Is it a V? Is it a Z? It was some sort of weird spelling contest. I loved, in fact, when it appeared for a while that Nike was branding not only athletic wear, but economic cycles. And it came to my attention that we were really asking the wrong question. Economists were asking economic questions and using as their model economic modalities where we got into recessions for economic reasons, we got out for economic reasons. In fact, that economic discussion was in a bit of discord with the broader discussion we were having. And what we were realizing as a broader society is that this was a non-economic event. This was in some ways a new type of war. And Jason, we've been debating for a while what the next war, space war, in trying to answer Albert Einstein's question of how we would fight the Third World War. And there's a good argument that we're fighting it in ICUs and in the world. So if we understand in some ways the societal context of a war moment, what are the implications from a economic point of view? And just to think about that war analogy for a second, you just don't in a normal recession see some of the things we're seeing. So you don't see Ford Motor Company repurposing its plants. They did it for ventilators just as they did it for bombers in the Second World War. You see stars stepping forward to do free concerts for the frontline workers, just as you did with the USO tours of World War II. And you're seeing society step forward, spending massive amounts of money on a scientific endeavor designed to end the war. In this case, vaccines, and other eras, the Manhattan Project. So we begin to see the echoes of war. How will those echoes play through in our economy? So the model I've been using, Jason, is really to study what's happened in other wartime economies, a little bit less what happened in the global financial crisis, the dot-com boom, et cetera. McKinsey's done some work on this also, but just 6 quick things I would give to you. First of all, war economies tend to go on longer than people expect. In 1914, Kaiser Wilhelm said that the soldiers will be back before the leaves fall from the trees. We originally thought this might be over in May or June. At the end of the day, there is nothing we can do that will change the nature of the war. It essentially can support society, but this war will be won or lost with a vaccine or with therapeutics. That's when life will go back to normal, not because of some Fed action, et cetera. What we're hoping for here is a white swan to complement the black swan of the appearance of the virus. Second point, and this is a really important one, Jason, in a normal recession, not that many companies do really, really well. In a wartime economy, some sectors do really, really well and other sectors do horribly. If you go back into World War II, the steel sector went up for 5 years. Entertainment went down and stayed down at 25% below pre-war levels for 5 years. So what we're seeing within the economy is a massive dispersion of sector performance. Third thing is, of course, the government becomes a big player. World War II, 48% of the economy. Currently, we're only at 13.8, could go on for a while. People mobilize in a war. We think of mobilization as an army. I would argue that all of us were asked to mobilize. We were paid, in some cases through unemployment checks, to sit on couches. That was a form of mobilization against this particular entity. And the last 2 points, I think, will really shape the world ahead. When you leave a recession, you go into something called a recovery. When you leave a wartime economy, you often go into something called a recession. Look at the economy back in 1920, 21. On a hopeful side, though, major societal changes, things like we were talking about in the racial justice movement, major societal changes often happen in post-war economy, national health care, the rise of the land-grant universities. So as we talk about this moment, Jason, I think we have to get out of the U, the V, the Z, et cetera, and we have to think about the historical lessons of what happens in wartime economies, and particularly the sector dispersion.
Right. So that's really an interesting place to start, because the next place I want to go actually has a war theme as well. Let's talk about the Maginot Line.
Yeah, I'm sorry for all the war themes today.
The world we're living in.
Yeah, it is a inexorable human tendency to try to fight the last war. So, post World War I, the French built the Maginot Line because it's what they wish they had before. And post 9/11, we create TSA in a whole new world of airport security. And it's funny, it doesn't always work to fight the last war. Maginot Line didn't work in World War II. A pat down doesn't actually work that well against an RNA virus. But this is indicative of where money will be spent. So if we're going to rebuild the Maginot Lines of what we wish we'd had before, let me bring to you, 4 ideas of things that I think will be reactive investment opportunities out of what we're going through. The first is we were totally misplaced in terms of national stockpiles and our footing in epidemiology in total. In fact, it wasn't that we weren't spending money. We were spending money thinking that the risk was bioterrorism. So I think we could give rise to an entirely new, really interesting era of life science spending. These projects have already been launched around the world, and I think they'll echo into the future. So life sciences to me is a truly interesting area. And a piece of that obviously is our stockpiles were extraordinarily awful. They will be rebuilt and they'll be spread out and become substantially more robust. So investing into companies that are solving these 2 problems, I think, will be an interesting opportunity. The second thing is our healthcare IT system was horrendous. We couldn't even really get data on what cases were happening, why. We had no hope of contact tracing. And the healthcare IT system in the US has always been hobbled by a series of antiquated rules, et cetera. I think in the future, we may see a reimagining of healthcare IT. You would not have thought that you would take your shoes off and be patted down pre 9/11. I think we're going to have previously unthinkable changes to our healthcare IT system post this moment. Third idea, we thought we'd spend a lot of money on e-commerce infrastructure. Turns out we need to spend a lot more. An enormous growth in e-commerce, but we strained the system in a way that customer behavior and worries clearly came to the fore. And so I think you're going to see a supercharging of e-commerce infrastructure spending. One of our companies is a supplier of uniforms to one of the major e-commerce players for their delivery men, and they've already ordered more uniforms than the U.S. Marine Corps ordered in World War II. So, immense forward growth in this area. And the fourth point is we understood that global supply chains have not only opportunities but risks, certainly in the PP&E area and healthcare area. And an interesting area, I don't know if you picked up recently, the semiconductor industry is turning to the U.S. government to ask for their help in bringing back onshore chip production. And so this idea of the rebuilding and domestication of supply chains, I think, is likely to be a maginot line of the future and an interesting set of investment opportunities. So keep an eye on that and know that this is just human nature, as well as in this case, truly needed.
All right. So as I look across here, and again, maybe it's because I'm in my 14th week of broadcasting a daily radio show from my home, looking out to my backyard, Bloomberg Business Week, 2 to 6 p.m. Wall Street time every day. Let's talk about close to home.
Nice plug, Jason. Nice plug.
Yeah, well, it's easy. It's easy. Come on, always be selling, Jim. But close to home, I think it really does hit home for everyone.
Yeah, we were, in a world where people were talking about virtual reality and living in different places and exotic travel, et cetera. And this has obviously forced us much closer to home. And a lot of the discussion has been, what has that meant for businesses? So the fact that we're home has decimated the theater business. It's maybe the nail in the coffin of certain uses for malls. And so there's been a lot of focus on what it means that we're not out of the home, but we ought to do some focus on what it means to be in the home, because we're finding some things that maybe we didn't understand that we were as interested in as we are. So just to have some fun, a few things that have caught my eye, bread. Where did this come from? Sourdough starter searches and inquiries online are up 1,300%. Yeast questions are up 3,000%, 600% increase in bread making. I mean, who knew? Will this continue? Second thing is exercise. Early on, everyone was talking about the quarantine 15. I don't know what it looks like where you are, Jason, but if you go around San Francisco, people are fit. There has been across all generations a rise in exercise of all sorts. I defy you to try to find a kettlebell or weight set of size online today. Who would have thought that is the shortage? And this is an area, Jason, I'd be interested in your view. You've written about this, but I think being home has reshaped our understanding of how we interact with exercise. Drinking, we have discovered cocktails and drinking at home. The big winner has actually been hard seltzers. It turns out we want our cocktails pre-mixed and in a can so we can get to them quickly, but a big shift in online alcohol sales. And there's some really weird ones, games, board games of all sorts, e-games, et cetera. The one that caught my eye, though, is gardening. Like, you don't just start gardening unless you're going to continue it. And there's been a massive increase in gardening, a complete unwinding of what had been a long-term reurbanization of the country. So my point is this: we are very focused on what the pandemic has taken away from certain industries, but I think it's also created what will be the consumer equivalent of comfort food that may echo into the year ahead, even as the pandemic hopefully moves on.
Answer your question about fitness, Jim. I mean, obviously, I have thought a lot about this, and to me, one of the big surprises has been, and I guess it shouldn't be, is how quickly people have shifted to at-home fitness. And obviously, this has been a huge moment for Peloton. But yesterday on the show, we talked to the CEO of Hydro. They just raised $25 million, as you're probably aware of. I know that a lot of the fitness companies, including Lifetime Fitness, which I believe is in your portfolio, they're doing a lot, especially because they're in parts of the country maybe slightly less affected. They're trying to be very creative about that. I don't see this health movement going away. And you and I have talked about this before. I mean, that it's a mega trend that it feels like this has only accelerated.
Yeah, I think this will be an important evolution of the exercise and health business. And the way I think about it is fitness is going to go omni-channel. So it used to be you went to the gym, you didn't sweat at home. It's now going to be a complete where your fitness club will give you apps for when you travel or are home. You'll be You'll have devices that will help you keep track. Those will be hooked into your gym. So I think just like retail has gone omni-channel, fitness is going to go omni-channel, and that will be one of the echoes of this moment.
Yeah, no, I absolutely agree with you. And I think, seeing things like what Equinox has done with their Verus app and the omni-channel term is definitely the right one to think about there. All right. So again, this next one is close to home as well. Every day we are spending so much time doing exactly what you and I are doing, which normally we'd be having, again, as I've belabored, we'd normally be having this conversation in a conference. But even beyond that, if I was in San Francisco, I would stop by and see you, and vice versa in New York. And yet I find myself doing this sort of thing all day long. If I'm doing that, I can't even imagine what it's like for you. Zoom boom.
Zoom boom. Every dislocation seems to give rise to some major change that then echoes through society. So if you think back to World War II, the rise of air power led to an era where there was a rise in international air travel, the decline of ocean vessels. The rise of e-commerce obviously created challenges for the dead mall phenomena. So I think we can ask ourselves, what will rise in this era that will echo through society well beyond the pandemic? And I think probably everyone's favorite answer to that is work from home, and in particular Zoom. And yes, we have new ways of managing files, distance working, et cetera, but the most impactful front of mind example is the Zoom boom. And this is personal. I gathered some stats last night from our office, and we've dramatically changed our use of this tool. 4.3 million minutes in May alone. On a personal basis, I went back and looked at my calendar. I've been running on average 55 to 60 Zoom calls a week, Jason. And if you look at the combined time of my Zoom calls, it's about 45 to 50 hours a week. The strangest part of my work processes used to be the fact that I was in the air between an hour and a half and 2 hours every day of the year. I'm now in the Zoom room with an enormous proclivity to use the tool. So the question is, how will this roll through on a longer term basis? There's been surprisingly quick movement by a lot of companies to say, hey, maybe we're actually going to work at home forever. Most notably here in our neighborhood, Facebook, Twitter, et cetera. And we've entered this national dialogue about what does it mean to work at home? Will it mean demographic changes, because maybe people will want to live in lower tax areas, and there'll be more proclivity to live and work from places like Raleigh than places like San Jose. So we very quickly got into this. Is this the death of office space? And for me, I'm maybe a little bit more on the cautious side of that, and I think we're in an evolutionary, not a revolutionary moment. And I think there's a risk of moving too fast on this. If you look at a willingness to work from home, only 13% of people express a willingness to work at home. And if you go to the very right side of this, only 10% of people say they're willing to work from home all the time. And it works well, quite frankly, for Zoom and a firm like ours where we all know each other. But where we're really struggling is when we onboard new people, as we try to teach them, train them, et cetera. It's difficult to use Zoom to build the culture we want to build. And we're already seeing the idea of Zoom fatigue growing, where people are essentially worried about the mental health. It turns out, and it's certainly true for me, it's really disturbing to look at yourself on a screen for hours and hours a day. So for me, I think we should think of what's going to happen to office space as evolutionary. First of all, in the near term, we're going to sort of go against what has been a long-term trend towards densification of office space. We may actually, begin to spread people out in a post-COVID world. But offices have always changed, from the first office, 1727, in the Admiralty Building, through Taylorism, through open plans, through Frank Lloyd Wright, recent movements to make offices more like we continue to get the core interaction that's part of building a culture in a company. One thing I would point out is we tend to go to this big thing, should we be all in the office, all out of the office? I think the real legacy of Zoom will be certain sectors that are fundamentally changed. So we're large investors, as you know, Jason, in online education at the college level and InStride in K-12 math and Dreambox. And we're seeing massive adoption of online tools. There's certainly some slips between the cup and the lip in terms of the effectiveness of that, but I don't think we're going back to the level of technological interaction that we had before in education. I think Zoom will be a go-forward tool of real importance. And the area people are just beginning to talk about, we own medical companies across the world, from primary care physicians to urgent care facilities to pediatric companies in India. And what we're seeing is literally 10 times the amount of use of telemedicine and growing in efficacy. And just like Uber changed the front end of how you call a taxi, I think Zoom and telemedicine is going to change the front end of how you interact with the health system. And this is accelerating a normal rate. So the Zoom boom is going to continue. It's going to echo into an evolution in office space, but within certain sectors, I think it's fundamentally going to change market dynamics.
All right, so I'm going to leave the last two because I want to give you a reason to come on my Bloomberg Business Week show and tell me the last two. But I do want to, before I thank you, Jim, I just want to ask you sort of to wrap up. You touched on a bunch of different trends, which are fascinating. And I do wonder, from your perspective, and this could include anything you said at the top and all of that, like, what's the thing that you feel most fundamentally will kind of stick in terms of your life, in terms of your investing, in terms of running a global firm from this moment?
I think the most immediate, I'd say two things. The most immediate is the use of the Zoom tool. So, will we use video in our life constantly in a way we didn't before? And it feels to me like we will in ways we don't yet understand. Video has taken over the internet in any given ways. And in some ways, it's weird that texting and audio still was our main form of communication. So I think we're going to have a fundamental change in communication. But I think the other thing I'm concerned about is this kind of the dual pressures of what had been a movement towards globalization, and now the reverse pressure, which is going to be a movement towards domestication of supply chains close to home, et cetera, expressed both in business and in politics, I think will shape the world in ways that it's still too early to call.
Yeah, no, it really is. It's a remarkable time, to say the least. Well, it was great to see.
I do want to circle back, Jason. This is the year ahead has been different. I hope that we'll stay safe through the global pandemic. I hope that we'll use this moment in the racial justice movement to really add a weight and an effectiveness to our desire and our ability to change the pernicious social ills that we've dealt with for a long time here. So it's been a difficult year, but in some ways I see some hope and action in the world ahead, but it's going to be a time to think.
Yeah.
Before you act.
Absolutely. And I do think, it's interesting to go back to one of the things you said at the top, which is, these things that we're facing were not predictable, when we were last together in November. And it's interesting to think about these inflection points, especially given the historical context that you just gave us. Well, a real treat to see you. Thank you for doing this. Always grateful that you share these with us, and certainly an important time to, as you say, take a beat and think about it. So, Jim Coulter, thank you. Great to see you.
It's a pleasure, Jason. Look forward to seeing you in person.
All right. Well, and thank you to our audience. This has been Bloomberg, the year ahead revisited. After this all concludes, you will get a survey. Please let us know what you thought about it. Also, feel free to go on social. Follow us at Bloomberg Live. I'm at Jason Kelly News. You can also check out LinkedIn for updates for upcoming events. Especially excited about Bloomberg Invest. That's happening next week. You can catch my conversations with Steve Schwartzman, Bruce Flatt. We're going to be talking to Treasury Secretary Steven Mnuchin, Jim Chanos, so many more. Check that out at BloombergLive.com. It's a stellar killer lineup, and you're going to want to hear what some of the great minds in investing have to say, just like you just heard in depth from Jim Coulter. Again, my thanks to him, his team, our team at Bloomberg for putting all of this together. We're living in a virtual world, but we're still finding ways to get together. Thank you so much. I'm Jason Kelly signing off.